Well, now it's time to welcome back to the show Rob Lees from Mortgage Choice Blue Mountains and Penrith. And this, of course, is our weekly finance segment. And today, Rob, we're going to be answering a few more questions from our listeners via Facebook.
That's right.
Okay, first up is a question from Narelle, which was actually from last week. So, Narelle, I hope you're listening. What is the best home or business loan to apply for in a volatile economic environment?
Yeah, and hi to Narelle. Narelle's actually from Queensland, from Brisbane, and was evacuated during the week due to the floods. So I hope she's okay, and I hope she's able to tune in. But I knew her from about 20 years ago. So that's the thing about Facebook, and you reconnect with a whole lot of people. Where Narelle's coming from, and I messaged her via Facebook as well, just to get some clarity on this. What she's got in mind, she was around in the 90s, okay, when interest rates were getting up to 17, 18%. And it's a common fear that a lot of my clients have too, who are around in that period. What if we're in all-time historical low interest rates at the moment? What if interest rates go back up to 17%, 18%, and that kind of range? People are stretching themselves in buying property at the moment, paying top dollar for property. They're stretching themselves to the limit in terms of their lending at very low interest rates. What if they go up? How are people going to cope? And what sort of loan product do people need to take out in these sorts of circumstances? So that's the background to the question. I think the first thing I want to say about this is that I think it's probably unlikely that interest rates are going to go that high again, although we can never say never, because we had a GFC and we didn't think that was going to happen either. But the reason they probably won't go that high again is because the Reserve Bank is far more proactive about interest rates now, and also we've got more banks in the marketplace and there's a lot more competition. But having said that, interest rates will go up, and I think the first thing I want to say about taking out a loan is it's got to be affordable, and it's important that it doesn't place you under hardship. I think, and we do this in our assessments with clients anyway, I think when you're taking out a loan, you need to add on 2%, work out what the repayments are going to be, and make sure that's going to be affordable for you. So I think that's the first thing. And then I think the second thing too is in terms of the type of product, and again, just messaging Narelle, what she was talking about here was variable versus fixed. The downside of a fixed rate is that you're locked in for a period of time, and if you sell the property and you close the loan, you incur quite high break costs. So if that's something that you're going to do or you plan to do in the short term, a fixed rate isn't right. But if you're going to stay with a property in the long term and finance is very, very tight, it's worth considering fixed rates, where you can lock in a fixed rate at the moment for 5 years at 4.39%. I did one of those during the week. So I think they're the sort of things to look at, and that can mitigate some of the risk against interest rate rises in the future.
All right, terrific, Rob. This next question comes from Renee. And Renee asks, how can I find out where all my super is and what are my best options for putting it all together?
Yeah, again, another very common question, this one, particularly for young adults who've had multiple jobs. My kids are like this. They had lots of part-time jobs and lots of casual jobs, and they didn't really care about super when they were younger. To some extent, they still don't care. But every job they went to, a new super fund was started. So that's where lots of young people accumulate lots of funds. So the first place I think to visit to try and find lost super would be to go to type into your browser Super Seeker. You can add, I think it's superseeker.super.ato.gov.au. So it's an ATO site. Go to the ATO site, and if you type in your full name, your date of birth, and your tax file number, your lost super there should be some lost super there. Now, not all your super funds will be listed there, but these will be lost super accounts. So they'll either be super accounts where the super fund provider has sent statements to you and they've bounced back. So it's lost in that sense, and so it's gone onto that site. Or maybe it's a very low balance and they've rolled it over to a low cost fund as they have to do, so that it's not eroded by large fees. So that's the first place to start. If that doesn't list all your super, you might want to track down other places where it could be. Now, most employers, young people, when you're working in different places, normally the employer will sign you up with an industry fund. So if you've worked in retail, it might be with Rest Super Fund. If hospitality, cafe work, it might be Host Plus. Building industry, CBUS. Health industry, Hester. So you might actually phone those funds if you've had jobs in those sort of industries, and just give them your details and see if they've got a record of your particular fund. If you still haven't collected, if you still think there's something missing, go back to some of your employers and ask, see if they can give some information on what the default superannuation fund was. So first, having tracked down where all your super is, then trying to work out how to bring it together. Now, not everyone can do this. In a lot of cases, it would be good to get some advice. But the sort of things you would want to look at is which fund has got the lowest fees. You want to look at the investment options and make sure that they're right for you. And that the one that's often overlooked is insurances. So it may be that you want to hold on to the fund that has some really good insurances, because most of those insurances come without assessment. So it might be a death benefit, a total and permanent disability benefit, or even an income protection, and you may not want to lose that. So if you can do that yourself. If you're not confident, get some advice. We give that sort of advice. Tim Heyman, our financial planner, does that. And if I can give an example, I had clients I wrote a loan for about 5 or 6 years ago, and sadly the husband passed away in a car accident about 12 months ago. And as it turned out, he rolled over his superannuation to another fund to save money about 6 months before his death, and that fund had a death benefit. He lost it when he passed away, and I guess those sort of things remind me of just how important this is. And in our office, we don't want to just get people into debt. We do want to check out your overall situation. So making the right decision there is very, very important.
All right, have we got time for one more track then?
What are we doing? Oh, look, no, I don't think we do. And if we do, we'll put it on afterwards. Let's carry on with the questions for the moment. And just a quick one while I think of it. Just in terms of tracking the sort of lost super funds, do we know how far back in time that goes?
I think, I'm not entirely sure, but I think that once they're lost, they stay there for a very long time.
Right, okay.
Yeah. So it could go back a very long time.
Right.
Yeah.
All right, well, our last question for today it comes from Robert. What do I need to qualify for my first home loan, and what government grants are available to help first home buyers?
Yeah, again, very common question. I get asked this question many times every week. So 2 things to qualify for any loan. First, income. You need to have sufficient income, and that normally would be employment income or self-employment income.
Can I just butt in there?
Sure.
If you're self-employed, you have to, is it 2 or 3 years you
2
have
years.
to? 2 years
2
now?
years. You want to have 2 years minimum self-employed. If you're permanent, you want to be off probation. If you're casual, you want to be in that job for about 12 months. So first, you need sufficient income. Secondly, you need either equity or cash. If you're a first-home buyer, it's normally cash, and you'd need to have a minimum of 5% genuine savings. Genuine savings is defined as either held in an account for 3 months or accumulated over a 3-month period. Lump sums like sale of a car or tax refund don't count as genuine savings. So you need to get that together to qualify. If you're buying an established property, you need to not only provide the 5% for the property, but also cover your stamp duty and legal fees. The only way to get first home owner benefits at the moment is if you buy new, that is a brand new property that's never been lived in, or house and land, and you qualify for a stamp duty exemption on the land.
What about if you build?
Yep, that's exactly right. Yeah, so if you buy land, you get the stamp duty exemption on the land,
right,
and then you get a $15,000 grant for the construction project. And that's going to change on the 1st of January. It's going to be reduced to $10,000. So if you're going to do it, you might need to get your skates on.
Get in quick.
But the benefits available at the moment.
Okay. All right.
We do have. We do have time.
We do have time. Well, let's play another track then. This is Joe Walsh with Secondhand Store.
That was Joe Walsh with
Secondhand Store.
There you go.
Okay, we're back with, we're done, aren't we?
We're done,
And
that's right.
The track
Till
is
next
still
week, at
going. It's got
least.
this little funny bit at the end of it. Okay. Well, Rob, thanks again for
pleasure.
joining us on the show this week. And that, of course, is Rob Lees from Mortgage Choice Blue Mountains and Penrith. And you can contact them on 4739 9749 or visit their office at 3/13 Hope Street in Blaxland.
And Rob, I'm going to sort of stroke your ego a bit here because a colleague of mine mentioned that she regularly listens to the show and how impressed she is with your knowledge and your expertise, and she thinks your segment's great. So I just thought I'd pass
Thank
that
you
on
so much for that.
online.
Thank you.
That's
Very good.
okay.
Wonderful.
Yes, you'll get a
Great
gold
to hear.
star on your forehead on the way out.
Fantastic.
Well, look,
Thank you.
very